Hi, good afternoon. I'm Benjamin, and on my right, this is Han Yang. We are group 20 from session 6, and today we'll be presenting to you our market view for our financial market assignment. And without further ado, let's start. Okay, the first part I'll be talking to you about the Australian dollar to USD, and the second part, Han Yang will take over for the Australian dollar to Japanese yen. And these are the economic indicators that we'll be touching on. Okay, there are many different factors that could affect the exchange rate between currencies. In the case of Australian dollar to USD, as you can see, the two currencies have different interest rates according to World Bank 2016. And it is important to realize that Australia has higher interest rate compared to the US. Based on the interest rate parity, the interest rate affects the value of currency because the investors are willing to hold currencies that have high interest rate. Higher interest rate leads to higher interest income. So traders purchase currencies with high interest rate and sell currencies with low interest rate. The higher interest rate of Australia currency suggests that it is likely that Australia appreciates against the US dollar. And next indicator is the inflation rate. And inflation rate also matters because it affects the value of currencies because of the purchasing power parity. This means that currency would maintain their actual purchase power over time. The actual purchase power is affected by the inflation rate. The higher the inflation rate, the lower the purchase power it is in the future because prices of products increase at faster paces. And the inflation rate for Australia, as you can see, and compared to the USD is 1% and 1.1% respectively. And therefore, the difference suggests that the price of products and services in Australia would increase at a lower pace than those in the US. Therefore, the purchase power parity suggests that Australian dollar would appreciate against the US dollar. Another factor affecting the value is the growth rate of the economy, because investors would always like to invest in economies that's high in growth rate. The GDP growth rate of Australia and US is 3.3 and 1.2 as follows, and this means that the economy of Australia grows at faster pace, and investors will appreciate the Australian dollar because if they invest in Australian investment projects, they are more likely to generate higher returns. And finally, government intervention. The US fund is in the process of raising interest rates, so that the impact of USD is that it could appreciate against the Australian dollar because of the activities of RBA, implying that Australia may not be in a hurry to raise interest rate, especially when the unemployment rate in Australia is high and the global commodity market is still weak. And the US still has the most creative and powerful economy in the world, and the demand for global investors amid uncertainty for US is high. Therefore, combining all these factors, it is likely that USD appreciate against the AUD in the near future. And next part will be Han Yang will take over.
Hello everyone. Similarly, comparisons could be made between Australian dollar and Japanese yen. In the case of Australian dollar and Japanese yen, the two currencies have different interest rates. According to World Bank 2016, the interest rate of Australia is 1.5% and the interest rate of Japanese is negative 0.1%. Therefore, the Australian dollar has higher interest rate, and the interest rate parity suggests that the Australian dollar would appreciate against the Japanese yen. The inflation rate for Australia and Japan are 1% and negative 0.4% respectively. The higher inflation rate, the lower purchase power, is in the future because the price of products increase at a faster pace. This suggests that Australia has higher inflation rate than Japan, and the price of product and service increase fast in Australia. The purchase power parity suggests that Australia would depreciate against the Japanese yen. Furthermore, according to World Bank 2016, the GDP growth rate of Australia and Japan are 3.3% and 0.8%. The GDP growth rate of Australia is much higher than that of Japan. This suggests that Australia has a fast growing economic, while the Japanese economic is not growing as fast. Investors are more likely to invest capital in Australia instead of Japan. Therefore, this means that it's likely that Australian dollar appreciates against Japanese yen. The value of currencies is dependent on government policy. Last part, overall, the government in Japan is much more aggressive in using expansionary monetary policies to stimulate economic growth. For example, Japan maintains a negative interest rate to stimulate its economic growth. The government has no intention to raise interest rate in the short term. This is future impacted by the negative impacts from the demographic profiles of Japan, because the Japanese population get increasingly old and the consumption power wasn't gradually. This means that the comparison in Australia and Japan is certainly that Australia has a much more attractive economic system, and the demand for Australian dollar would be higher than that for Japanese yen. This means that overall the Australian dollar would appreciate against Japanese yen in the near future.
And in conclusion, we believe from our analysis on the combination of the mentioned economic indicators has led us to conclude that the USD will appreciate against the Australian dollar and Australian dollar against the Japanese yen. Thank you for listening to your time. Thank you.
Thank you.